PantheonAI presents Tesla Robotaxi hype, Couchbase buyout, and tech stock Soar. Good morning, everyone, and welcome to the PAI Morning Briefing. I'm John, your host from PantheonAI, and today is June 20th, 2025. So glad you could join us.
And I'm Sarah. Definitely need that coffee today, John. Good morning, everyone. We're really diving deep into a market snapshot that's, well, equal parts intriguing and challenging, isn't it? As we take a stroll through the figures and stories shaping today's trading day.
You got that right, Sarah. So grab your coffee, settle in, because we have a full agenda ahead. Let's kick things off with a quick market overview. The S&P 500 is trading at roughly 5,976.6, reflecting a modest decline of about negative 0.3845%.
A slight dip there. And over in the Dow Jones, its level sits near 42,269.26, showing a nearly flat performance, just a drop of roughly negative 0.05%. So pretty stable comparatively.
Right, but then the Nasdaq is experiencing a steeper dip, settling around 19,479.59, down by approximately negative 0.8137%. And the Russell 2000 is similarly in the red by about negative 0.64%. with its current reading near 2,109.71.
Yeah, and it's not just equities, is it? Even cryptocurrencies aren't immune to the morning blues. Bitcoin now trades at nearly 104,049.67, falling by almost negative 0.6%, while Ethereum sits around 2,489.43, down by about negative 1.27%. So a pretty broad-based softening across the board.
Exactly. And when I look at these numbers in the early hours, I have to ask myself, what do these slight declines across the board signal? Is this just regular market ebb and flow, or could there be more fundamental shifts at play that we need to be aware of? It's almost as if every investor is taking a moment to catch their breath before the real trading action kicks off later today. And honestly, sometimes I wonder if my coffee is as jittery as the markets.
That's a great point, John. It really does feel like a collective pause, doesn't it? Like everyone's just holding their breath a little. And speaking of broader movements, let's move on to some major market trends that have been keeping everyone on their toes lately. In recent weeks, we've seen a mix of cautious optimism paired with technical corrections, especially in the high-tech and growth sectors.
Yeah, and this current downtrend in major indexes could be attributed to a mix of profit-taking, concerns over geopolitical uncertainties, and a slight pullback from that investor exuberance we saw earlier this month. There's also the ever-present impact of Federal Reserve policy whispers, with market participants carefully reevaluating the impact of evolving monetary policy on inflation expectations and growth trajectories.
You know, sometimes the economy feels like that one friend who's always one step away from a full-blown existential crisis, and yet, in the end, somehow manages to show up to the party with a smile. It's that kind of resilience, even with all these underlying concerns. But just as we're digesting those broader market trends, there are some headline stories that have been circulating repeatedly across our news feeds.
Absolutely. One of the hottest topics right now is Tesla's much-anticipated Robotaxi service launch. For the past decade, Elon Musk has teased revolutionary autonomous vehicle technology, and it appears that the promised robotaxi fleet could be arriving sooner rather than later. This repeated coverage, which you may have seen on your news apps not once, not twice, but 3 times over, really marks a significant turning point.
It's been a long period of anticipation, hasn't it? Investors are absolutely buzzing about what this might mean for Tesla stock and its future earnings prospects, as well as for the competitive landscape in the autonomous vehicle space. But as with any breakthrough, it comes with its fair share of challenges. Regulations, safety protocols, and competition from both legacy auto manufacturers and tech startups will be huge issues for Tesla to navigate.
Definitely. It's an exciting prospect, but one that demands careful scrutiny. Now, another story making rounds is the emergence of double-digit gains among tech companies in the S&P 500 this month. Semiconductor stocks, with Micron at the forefront of performance, are racking up impressive numbers. And alongside them, companies like Coinbase are also benefiting from the persistent buzz around stablecoins.
Right, and if you're thinking about the complexities of blockchain and semiconductors, you're not alone. These aren't just buzzwords, John. These segments are reshaping entire industries and creating ripple effects far beyond the confines of traditional financial markets. It makes you wonder, Could this be the beginning of a sustained growth cycle in the tech arena? Only time will tell, but it certainly has investors and traders warming up for what might be a very exciting quarter ahead.
I agree. And yet another noteworthy development, Couchbase stock has been on an upward trajectory pre-market, experiencing a surge of roughly 28%. This dramatic jump comes on the heels of an all-cash buyout valued at approximately $1.5 billion by Haveli Investments.
Wow, nearly 30% leap before the trading session even begins. It's hard not to wonder if there's a wave of optimism sweeping through the under-the-radar segments of the market. This move not only reflects confidence in the company's prospects, but also highlights the appetite for consolidation deals and strategic acquisitions in today's tech environment. It's these kinds of surprises that remind us that sometimes the biggest opportunities exist outside the mainstream headlines.
That's a great point. And speaking of interesting moves, turning our attention to the automotive sector, CarMax is also generating quite a bit of buzz. The used car market appears to be on fire, with CarMax experiencing robust stock performance as used car demand rockets, reportedly at the fastest rate we've seen in nearly 4 years.
That's fascinating. Higher tariffs on new vehicles and shifting consumer preferences have really contributed to this phenomenon, as people find solid value in the pre-owned market. It's almost as if CarMax is letting us in on a little secret. Sometimes the second-hand deal is better than the brand new one. And, in today's economic environment, finding that balance between quality and affordability is more important than ever.
Definitely. So let's step back for a moment and tie these stories together as we explore the broader market implications. When we see Tesla moving boldly toward autonomous transportation and tech companies snapping up impressive gains, it's not just about volatility or isolated headlines. It's about an evolving realignment in the way technology interfaces with everyday life and business.
Exactly. Autonomous vehicles and the integration of artificial intelligence in everything from ride-sharing to personal finance are reshaping the dynamics of entire industries. For investors, this is a call to pay close attention to how traditional industries adapt to a rapidly digitalizing world. The interplay between innovation-driven sectors and more traditional sectors like energy and finance really highlights the intricate dance of risk and opportunity that every market participant navigates daily.
Couldn't agree more. And speaking of sectors, let's talk a bit about the detailed sector analysis, something that always sparks lively debate. The tech sector, as we've seen, is clearly in the spotlight. With breakthroughs in AI, semiconductor innovation, and cloud computing fueling extraordinary growth, the tech space remains a beacon of opportunity.
Yet, even as tech grabs headlines, we shouldn't overlook the shifts taking place in energy and finance. The energy sector, for instance, is gradually witnessing a transformation as traditional fossil fuel companies begin to integrate renewable energy strategies into their long-term plans. With regulatory pressures and evolving consumer sentiment driving this change, companies long dominated by conventional energy sources are looking to pivot, creating both challenges and opportunities for investors.
That's a huge shift. And then there's finance. In an era where digital currencies and fintech innovations are disrupting traditional banking, established financial institutions are rapidly adapting. They're fusing robust legacy systems with cutting-edge technologies to better serve an increasingly tech-savvy consumer base.
It's a complete transformation. And these sector stories are interwoven with global market implications, where the interconnectedness of trade, regulatory policy, and geopolitical events cannot be overstated. Markets in Europe, Asia, and the emerging economies are all feeling the tremors of global supply chain disruptions and shifts in regulatory stances.
For example, while the United States is grappling with internal market dynamics and high technology valuations, European equities are contending with central bank policies that aim to balance inflation with growth. And across Asia, investors are watching with bated breath as governments implement measures to stabilize capital flows while ensuring that monetary policy does not overheat the region.
It really raises the question, John. In this increasingly globalized framework, what might seem like isolated moves, a pre-market surge in a particular tech stock or a rally in used car equities can have far-reaching implications. How might today's market shifts reshape tomorrow's global economic landscape?
That's the million-dollar question, isn't it? As someone who's seen multiple market cycles, I have to say that the market is almost like a well-orchestrated jazz session. There are moments of high intensity and brilliance, as well as pauses that allow for a recalibration before the next big move. With every headline and data point, there is a story unfolding that could be the precursor to larger market trends.
I love that analogy. Some might say that we're on the brink of a new chapter where technology not only disrupts industries but redefines the very fundamentals of finance, transportation, and consumer behavior. And that's a pretty exciting proposition for any investor with an appetite for forward-thinking strategy. It also highlights the inherent value of diversification.
Absolutely. When you have stocks that are highly sensitive to technological breakthroughs sitting alongside traditional value-driven companies like those in the automotive or energy sectors, you're building a portfolio that's resilient across multiple market environments. Tesla's push into robotaxi services could lead to a significant market correction if it faces regulatory or technical issues, but it could also open up a lucrative new revenue stream if these challenges are overcome.
Right, and similarly, the very rapid gains in the tech space remind us that innovation-driven sectors can explode in value, but they can also be some of the most volatile in turbulent times. I'd also add that the market's current state is a compelling mix of optimism tempered by caution.
Definitely. For example, while tech stocks continue to pave the way for high returns, there's growing concern about whether these valuations are sustainable in the long run. With inflationary pressures and the potential for more aggressive policy shifts from central banks, every investor needs to ask, is this the calm before the storm or simply a brief interlude in an otherwise bullish saga? And then there's the broader global picture. In a world where trade tensions and geopolitical uncertainties persist, can we confidently place our bets on global tech giants, or should we be more hedged in our approach?
Those are really critical questions. And that leads to a naturally important question to toss to you, our listener. What do you think about this shift toward emerging technologies and sustainability in sectors that once seemed firmly anchored in tradition? Are we witnessing a genuine paradigm shift, or are these simply cyclical movements that will eventually merge back into the norm? And as you mull over these questions, consider whether your diversification strategy is as robust as it could be in light of these rapidly evolving dynamics.
Excellent point, Sarah. So before we wrap up, let's recap the key takeaways from today's briefing. First, the overall market indices, S&P 500, Dow Jones, NASDAQ, and Russell 2000, are experiencing slight downtrends, hinting at a period of recalibration rather than panic. Cryptocurrencies such as Bitcoin and Ethereum have also seen modest declines, reminding us that even the digital assets are subject to broader market forces.
And second, the big news stories of the day offer clear examples of both innovation and consolidation. Tesla's anticipated robotaxi launch could usher in a new era for autonomous mobility, while tech companies continue to outpace other sectors with double-digit gains, driven in part by breakthroughs in semiconductors and blockchain.
Third, strategic moves like the Couchbase buyout signal that consolidation in the tech space is accelerating, a trend that investors should watch closely. And finally, the energy and financial sectors, though operating in a more traditional framework, are actively reinventing themselves in response to the digital revolution and shifting consumer preferences.
From a broader perspective, these narratives paint a picture of an economy in transition, one that is gradually bridging the gap between old and new, tradition and innovation, as well as local and global forces. For those of you invested in shaping your career or portfolio, these evolving dynamics present both challenges and opportunities worth considering. And having PantheonAI as your information Copilot means you're never alone on this journey. We are here to help decode the complexities of the market and empower you to make well-informed decisions.
You know, on a side note, I love when the market gives us these little puzzles to solve. It's almost like trying to finish a jigsaw puzzle without knowing what the picture is supposed to look like. A challenging yet incredibly satisfying endeavor when the pieces begin to fall into place. And if my attempts to infuse a little humor into the mix bring a smile, even during these uncertain times, then I consider it a win for all of us.
Absolutely. And as we close today's episode, I want to leave you with a few thought-provoking questions. Are we on the brink of a major technological transformation that could redefine how industries operate, or is this simply another chapter in the ever-changing saga of the market? How prepared are you to adjust your investment strategy to capitalize on these emerging opportunities while mitigating risks? And finally, do you believe that the coming months will see further consolidation in key tech sectors, or will we witness a broader rally that lifts the entire market?
I encourage you to mull these questions over during your day, and I invite you to engage with our AI Copilot if you have any questions or need further insights into these trends. Remember, every decision you make is a puzzle piece that contributes to the broader picture of your financial future. And sometimes, when the market feels as unpredictable as trying to predict the weather in April, it helps to have a trusted Copilot guiding you along.
Well said, John. Thank you for spending your morning with us here on the PAI Morning Briefing. We've navigated through a range of topics, from the headline-grabbing news of Tesla's impending Robotaxi launch and the rapid ascension of tech stocks to the steady, reassuring momentum in sectors like automotive and energy.
No matter how turbulent the market may seem, always keep an eye on the underlying trends, and remember that diversification and informed strategic choices are the keys to weathering any storm. Until tomorrow's episode, stay curious, stay vigilant, and remember, learning shouldn't feel like a full-time job. Have a great day, and I'll see you back here tomorrow for another deep dive into the markets.
PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.